Well, welcome out there once again to my program. Always a pleasure to be here and always a pleasure to have you out there in the audience. I have a gentleman who's been on my program a number of times before, and what we usually do is we talk about mortgages, things of that nature, which is for a lot of people always an interesting topic. As you know, if you buy a piece of property, most of the time you'll need a mortgage. The bank will loan you some money, but the money is in the form of a mortgage, and they're going to use the property you buy as collateral. So there's a few aspects of that transaction, a mortgage, the note, and well, of course, credit checks, etc. So, well, welcome again, Attorney Paul Abreau.
Thank you, Richard.
Paul,
nice to see you again.
Yeah. How was the roadway out there?
The roads are good. I was traveling from Stoneham down to here, did a closing up there, and real estate market's still doing pretty well.
Roads are clear?
Steady, and the roads are clear.
Yeah.
So that helps, because this time last year, as you know, was the beginning of the end.
Yeah.
So that did affect the real estate market last year. Obviously, if people couldn't get out to look at properties they couldn't buy, so.
Yeah, last year.
Yeah, so, but this year, things are looking up.
Market much better?
I would say the market's looking pretty good.
Yeah. Interest rates, roughly?
Interest rates have gone down the last few weeks.
Oh, is that right?
It's because people may have seen the stock market has gone down quite a bit this year, so
Oil
interest
prices,
rates kind of go the opposite way. So, so interest rates have come down a bit. So that's certainly not keeping people from buying. There's still certain communities. I just read today, that Somerset and New Bedford were two towns that were still well below the peak valuations of 2006.
Yeah, well, the Somerset market, especially with the closure of some of their power plants.
Yeah.
Well, one is closed, the other one is, I guess, on the verge. They're not sure what's going to happen.
Right.
And of course, Somerset has relied on huge tax dollars from those plants.
So there's going to be issues there.
So there might be a mass exodus out of Somerset.
Mm-hmm. Yeah, the taxes will probably be going up there, so
Yeah.
I would imagine. But you have industry coming down here. You have Amazon opening up, so that,
Well, yeah.
might do something.
I mean, it's not like building jet engines or helicopters.
Yeah.
We'll just have the trucks pull up and take away the Chinese goods, right?
Yeah.
I mean, what comes out of Amazon? Chinese goods, right?
Yeah.
So I don't know. Well, look at Walmart. Walmart closed how many
Yep,
stores?
they're closing,
Worldwide, 276.
They're closing Sam's Club also down in Somerset, right? Or Seacon?
Fall River.
Yeah.
Yeah, so, and they sell a lot of that stuff from China. But anyway, mortgages. What is a mortgage? What is a
Well, the
basic
mortgage is the security for the bank. So you're borrowing money from the bank. The bank doesn't trust you. So they put a mortgage on the property, saying that if you don't pay them back, they can foreclose on the property. So that's the simplest explanation. There's a lot of statutes now that govern how they have to perform a foreclosure and try to work it out with people if they don't make their payments and things like that. And now, tonight I think you wanted to talk about reverse mortgages.
Yeah,
which is totally different.
I mean, we see that on TV, Paul, constently.
You see Henry Winkler, the Fonz.
One of those ex-senators.
Yeah. Yep.
He's got, I mean, you watch a program, you get a zillion of those commercials about reverse mortgages. But, I mean, it's not as simple as maybe it's noted to be on TV.
It's not simple.
Give us like a basic.
A basic reverse mortgage is basically somebody that is elderly, usually over 65, and they might have paid off their mortgage a while ago. They're sitting on their house that they've owned for 30, 40 years. They have all this equity.
But they could have a small mortgage on the house.
They could, but let's just say that they don't.
Nice.
But now they're facing being retired, not having monthly income, or just limited income for Social Security, but they still have to pay the real estate taxes, the homeowner's insurance. But they have this asset, their house, that's just sitting there that they can't unlock the equity. So the reverse mortgage was a product that was developed so people could unlock that equity. So basically cash out your property while you're alive.
Reverse mortgages have been around for a while.
Yeah, they've been around.
It's not. It almost seems sometimes that it's a new way of garnering some additional cash.
Right, but I would say in the last 10 years it's become much more common, and then it could be, you know, the advertising and people becoming more comfortable. I think prior generations were very nervous about putting mortgages on properties and just pay off your mortgage and be done with it.
Yeah.
And, you know, so the reverse mortgage, well, that was a simple explanation of it. It's not for everybody, because you have to realize that you're taking the equity out. So if you're concerned about possibly leaving your major asset to the next generation, if you have kids or grandchildren, then a lot of that asset is going to be taken up with this mortgage that you've taken out. So if you had a $300,000 house and you took out a $150,000 mortgage, you're leaving the kids without $150,000.
In other words, the kids might have to go to work?
Yeah. So a lot of people don't care about that because, you know, they don't care about leaving the money to the kids. There's also plenty of people out there that don't have kids, don't have grandchildren. They might have extended family, but, you know, it's not as big a concern. For those people, reverse mortgage makes a lot of sense, because what are you saving the property for?
And I guess it could be in a situation where they just don't have enough income. They find that they're kind of squeezed, and they'd like to maybe just have a little extra once in a while.
Yep.
The expenses are getting a little too high, and the reverse mortgage.
And we should explain to people, because they might not realize with a reverse mortgage, like you hear mortgage, so you're normally thinking I have to make a monthly payment. With a reverse mortgage, it's reverse of that. You're not making a mortgage payment. The bank is actually paying you. And it seems strange because it's like, why is the bank paying me? They get paid back after you pass away, basically.
There's an interest rate involved.
There's an interest involved, and that's calculated through
So in other words, for every payment,
when you're making a draw on that, you know, and they can develop in different ways as far as how you do the reverse mortgage, whether you take a lump sum at the time that you close on the reverse mortgage, so maybe you take $100,000 out.
Now, what can you expect? Let's say someone takes a lump sum of $50,000. What can we expect in today's market as far as interest rates?
It is higher interest rates on reverse mortgages, so you're looking probably in the high 4s, 4%, 5%.
And that goes against the equity of the house.
Right.
And
yeah. So that will keep on growing the balance of the
now,
mortgage.
what happens if maybe in a rare circumstance it goes beyond the value of the property?
That really shouldn't happen, but it doesn't really matter. Once they give the mortgage, then you're not. What you are limited with in applying for a reverse mortgage is 50% of the equity.
Okay, so that's a limitation.
Yeah.
Which
so
gives,
that does protect people, so that they, you know, they don't overextend.
Yeah, and it's not only banks that give reverse mortgages. Is that correct? You might have actually mortgage companies.
Mortgage companies, as far as you're concerned, you don't care where the mortgage is coming from.
Yeah, as long as it's nice money, green money.
They are expensive mortgages as far as like the closing costs for it, which again you don't really pay for at the time of closing, but it's all kind of rolled in.
Because you pay for it in a sense, because that's...
At the end of the time, when you have to pay it back, it gets all rolled in. So there's like mortgage insurance premiums that get factored in to the payoff. So it can be a hefty payoff. I did an estate last year where the person that had passed away had taken out a reverse mortgage in, I think, 2009 or so. And it was a pretty high payoff once the estate was settled and we had to pay off that mortgage. So the person that had inherited the house didn't get nearly as much as he thought he was going to get. It was a friend of the deceased.
A friend?
Yeah.
Well...
And so he had no reason, you know, to really be upset about it. But it was eye-opening to see, like, that it accrues a lot of interest and fees and whatnot through. And the other thing is that for the people that do inherit, there's a time frame for paying off that mortgage. And that's what I found out is like the bank gives you about 3 months from the date of death to pay off that mortgage.
Okay, so someone passes away, they deed the property, well, I should say in their will, they said so-and-so is going to get my piece of property, but the person who inherits the property has only a certain amount of time to clear up the mortgage.
They will give extensions.
But well, they might not qualify
Right.
for a reverse mortgage.
Right, so they can try to qualify for a reverse mortgage, but the key for a reverse mortgage is that you have to occupy the property.
All right.
So like this friend that I'm talking about, he wasn't going to occupy the property, so that wasn't even an option. But, so you have 3 months to pay off that mortgage. If at the end of that 3 months you haven't paid it off, they will start foreclosure proceedings. It doesn't mean that they're really going to do the actual foreclosure, but they'll start the paperwork and the motion. Once the bank starts the motion of a foreclosure, the fees start going up because they have the attorney fees and they start adding on fees to that payoff.
Advertising. And this
Advertising and all that. And they will give you extensions. Like if you tell them, we're making a good faith effort to sell the property, it's on the market, we're just waiting for a buyer, or maybe you're just waiting for a closing, or you have it under agreement and it's just going to take a while for it to close, the bank will understand and they won't do the foreclosure. But the reason the bank starts the foreclosure proceedings is that they're almost required by the government, the mortgage insurance, because the property for a reverse mortgage has to be owner occupied and it has to be occupied. So the other thing is that if somebody gets put into a nursing home, again, you're in default. And
Okay,
that
so-
mortgage has to be paid off.
All right, so if the people who get the reverse mortgage, let's say, for example, there's two, husband and wife dies, husband still remains in the property, but then he goes into a nursing home, that's pretty much the end of the reverse mortgage in that legal
and
sense.
and that will start
The foreclosure.
default.
Yeah.
And these companies, the banks actually hire companies to check on the properties to see that they're that they are occupied. They will I think they send a form out that you're occupying
Are you
it,
still there?
or that they will drive by and see, because that happened last year with that estate that I was doing, that there were people going around the property to see if it was occupied, and the bank knew that it wasn't occupied. So.
Now, all right, let's say there's a couple out there, they're listening to this program, and they'd like to get a reverse mortgage. They call up XYZ Bank. What is the obligation of XYZ Bank to these people before anything actually happens?
There's going to be an education process that the people have to go through with a reverse mortgage. And people have seen in the commercials, as far as the government is, behind these mortgages. The government is not really giving its stamp of approval on these mortgages. What the government is doing is they're insuring the mortgages, which means that if they do go into default, then the government will pay any damages that the bank might have. But the actual processing of the loan is done by XYZ Bank. So the biggest thing with a reverse mortgage is the appraisal, because you're based on 50% of equity. So if you do have a mortgage on the property, and maybe you have tax liens or other liens on the property, reverse mortgage might not be enough for you, because you're limited to 50% equity of the house. So if you have a big mortgage already, it might not help you.
Outstanding tax bill, water bill.
Right. That can limit how much money you can get on a reverse mortgage.
So the monthly payments could be very small.
Yeah, as far as what you could get. Yeah.
And the monthly payments, is that based on some kind of actuarial table?
Yeah, they have a whole table that they figure out based on the age of the person when they apply, get the mortgage, and what their life expectancy is as far as giving you an annuity, what they call it, like an annuity payment on it. So.
Now, the interview, this is mandated by the government in the sense that
so there'll be an interview by the government, and then,
Oh, by the government?
well, I should say like a government-sponsored
Oh,
entity that
Okay.
is basically an education for the people getting the mortgage.
At the
So
home, or?
I think they'll do it over the phone, and they kind of go over the major terms of the mortgage so that the people understand what's going on. Because the big thing that they're concerned about is that, you know, you are dealing with elderly people, so you don't want them to be scammed into doing something that they don't understand. What they're
Banks
getting.
wouldn't do that, would they?
No, never.
Yeah.
So there is an education process to it. Sometimes they do tell people, if you're thinking about reverse mortgages, to think maybe, can you get an equity line as a cheaper alternative from a local bank? And an equity line is just is another mortgage where, again, you're taking up the equity of your house. The interest rates are usually lower on them, and you can pull out the equity, and you're only paying back what you pull out. So if you have a $100,000 line of credit, and you only take $50,000 out, you're only making your monthly payment based on the $50,000.
Well, that seems, but you have to make a payment.
You do have to make a
That's
payment, so that's
kind
the
of
thing.
like-
But you're pulling money out. The whole key, whether you're doing an equity line or a reverse mortgage, is that you're trying to pull
Money.
the equity out of your property because it's just sitting land that you cannot unlock that money from. So.
And would you say that one of the big differences between the reverse mortgage, that the money is actually paid to the homeowner
It's
versus?
paid to the homeowner
the
rather
other-
than you making a monthly payment
On an equity?
on an equity line.
Yeah, okay, so,
But an equity line is cheaper. You know, it's just, there's not as much interest accruing on that. You don't have the mortgage insurance premiums on it that they collect.
Okay,
The
so-
closing costs are
in other words,
cheaper.
if someone has a mortgage to begin with, but they still have a lot of equity in the property, they've been paying on a mortgage for years and years, the property value has gone up, mortgage is going down, instead of getting an additional mortgage or refinancing, maybe an equity line would be better?
Mm-hmm, could be, yeah.
Could be, yeah. So that's something,
It's just to think through your options.
Yeah.
You know, think through the costs of doing the reverse mortgage versus doing a simple equity line. You have to qualify for the equity line too. So again, that depends on the appraisal. And
now, is there any fees to start this off? Let's say someone's out there and they say, well, these sound like good ideas. I'll go to the bank that I usually deal with. I'll ask them to give me a rough idea of a reverse mortgage in my situation or an equity line of credit. Are there any, do you know if there's any fees, any kind of application?
there are fees, but
To
like with
start-
a reverse mortgage, they just roll it all into the loan amount,
Okay,
the
but-
mortgage that you're taking. So it's
So-
not like you're writing a check out of your checking account to
Upfront,
pay that
yeah.
fee, you know. An equity line will be a regular closing, but they're usually very simple mortgages. The closing, you might pay for like an appraisal fee and the recording fee for the mortgage and maybe a credit report fee. Usually equity lines are like less than $500.
No title? Yeah.
They'll do like a quick title search, sometimes the banks, but they don't require title insurance usually on an equity line.
All right,
Most
so
banks don't.
that sounds like a pretty,
So there's a lot less costs to an equity line.
yeah.
And some banks will do no-cost equity lines. You know, they just eat the cost. And they might say if you pay off the loan within the first 3 years, they recoup that cost, but otherwise.
Out of the interest that
Yeah.
they charge.
Right.
So, equity line, you don't have to be over 65?
Nope, you could be any age for an equity line.
So a younger...
You have to have good credit, you know, and same qualifying for a mortgage as for an equity line. So.
But you could have a mortgage already,
Right, right.
and probably,
So the bank will look at how much debt you have and whether you can afford it and that type of thing. So you can't just run out and get an equity line if you already have a large mortgage and a large monthly payment. That's making it tough for you to make your monthly payment, you know. And then the other thing that you have to think about is if an equity line isn't going to work for you, a reverse mortgage isn't going to work for you, whether you just sell the property. You know, whether it is time for you to think, is it worth it for me to keep on staying in this house and struggling every day to make the real estate taxes, to pay the insurance,
Maintenance
the
costs, cut the
maintenance,
grass.
to cut the grass, the heating bills, if you're in a large house that you raised your family in. It's a very difficult decision. I'm not saying take it lightly, but think about the stress that it's causing on you, and maybe the best thing for you to do is to sell the house, maybe downsize to a condo or a smaller house or an apartment, or maybe you can move in with a family member.
Well, yeah, I mean,
know.
the in-law apartment,
Yeah.
if it's feasible, sometimes that's the way that some older people will go, and then they've got the hopefully the care of their, children.
Yep. To take care of them. I had a situation yesterday where a person that owns a business next to my office was asking me about a reverse mortgages because his parents were thinking about it, and they live next door to him. And they're in a situation where they were hit with the financial crisis as far as their retirement funds took a big hit when the stock market
401k,
went down.
what do they call it?
Yeah, took a big hit. So they don't have the money that they thought they were going to have, and they're thinking about doing the reverse mortgage. So he was asking me about that, and then he was thinking, well, what if we buy them out, buy the house from them, like him and his brother, do something like that, and have the parents stay there? Because he was thinking it could be like an in-law apartment situation. It's just that they're in a separate house next door that he can watch them. But those are the kind of thoughts that family members go through, and it's not easy to buy out your parents because, again, you have to qualify for a mortgage yourself to be able to buy out your parents' house.
Well, yeah, I guess the other thing is if your parents have no mortgage,
Right.
and they say, well, we have no mortgage, we'd like to stay in the house, but the expenses are too great. We'll deed the house over to you, retain a life estate, you make the payments, and in the end, you've got the house.
Yep. You could have a deal like that.
Yeah, so there's we might say these private ways to go without getting a bank involved.
Yep.
And
we should add that we're not, there's a whole planning too as far as Medicaid and all that and nursing home care, and that's probably beyond the scope tonight of.
Well, what is it, 5 years?
5-year look back if you transfer a property.
And is that pretty strict?
Yes. Yeah.
No, they've been in there for 3 years, no credit for 3 years.
It just means you're extended out further as far as that you're not qualified for Medicaid. So if it's been 3 years, they'll disqualify you for another 2 years.
Which means that Medicaid will take a lien against the property?
Yeah, they'll take a lien against the property. They don't force you to sell the house to pay off the lien. The lien gets paid once the estate is probated and you sell the house, then you pay it off. But they don't force people out of their houses. They don't force people to sell their houses when you go into a nursing home. A lot of people think that, but it doesn't happen. Even if there is no possible way that you would think that you would be going back to your house, all you have to do is check off on the form when you enter the nursing home saying you intend to go back to your house, and that's all that's needed.
Well, we all intend that, right?
Yes, yeah. So that's why they just don't take a house. They're more than willing to wait it out.
And that's when the children, there's a possibility at that time a child or so can step forward and maybe do something in regards to, I guess, the property. But any interesting, any anecdotes? Anything interesting happening lately?
It's still, the market is still kind of interesting out there as far as buyers and sellers being difficult with each other as far as inspection issues.
Oh, inspections, that can be...
and that's where people are negotiating the property, because you have a situation now where people that are buying think they're paying too much for a house, and sellers are in a situation where they think that they're in control in this market because it's a hot market, so they can get whatever they want. So those two things going against each other can cause contentious
Well, I just read a case, as you're talking about this, I think it came out of Rhode Island, purchase and sales agreement, $30,000 as a deposit was put down. I think it was a $300,000 home. And of course the buyer had the option of inspection. they were satisfied, and they had a certain date by which they would have to notify the seller that they weren't satisfied. They went beyond that date, and they couldn't sell the house they were in because everything was somewhat dependent on the seller selling their house to buy
Oh, okay.
the seller's house. They weren't able to sell their house, and they asked for the deposit back of $30,000 based on the fact that there was some door damage after the purchase and sale agreement was signed, and they found some termite damage. Not much, but they found, and they said, based on that, we want our $30,000 back. And the seller said, you're not getting it back. You went beyond the date in which you could have complained about that because of the inspection, and anyway, the house was being sold as is, and the court agreed with the seller and said, no, the buyer cannot get back his $30,000. So
Wow, that's harsh.
it is.
You know, it doesn't happen often that somebody loses their deposit. Usually sellers will, sometimes you get into negotiations with the seller where you compensate them for whatever expenses they might have had and they go off and sell it. Or maybe you come to some negotiation with them that if they are able to sell the house at the same or higher price within the next 60 days, then they get the deposit back.
So
that type
it's
of
a
thing.
caution to buyers and sellers, and there was an aspect of prejudgment interest because the buyer took the case to court, and the court eventually said that, well, you're going to have to pay prejudgment interest, and those interests from the date that you brought the case until judgment, because the seller wasn't able to use the $30,000. It was being held by an escrow agent.
Yeah.
So things can get kind of rough out there.
An important point on that kind of case is that you have to pay attention to dates in your contracts. whether
Time
it's
was of the essence in the
Yeah,
contract.
so it's the closing date is important, your mortgage commitment date, inspection contingencies, those dates are important. They're not just, oh, can we just move this day? No, unless the other party agrees.
Yeah.
But, you know, I had somebody last week, the closing today that I had, the buyer on Monday said, can we just close on Friday? And I said, no, you signed a contract saying the closing would be today. And I said, the seller has expenses. They're paying interest on their mortgage every day, paying taxes. So extending just a couple days might not seem like a big deal, but it is a big deal, you know, so you can't just do that.
Well, we're once again at the end of the program. Attorney Paul Abreau, where is your office?
In Norton,
Okay. Attorney Paul Abreau, you have any title matters, you're interested in a mortgage, things of that nature, you're going to have your house inspected, you're going to sell it. Attorney Paul Abreau in Norton, get in touch with him. He knows the ins and outs. So thank you out there for watching. I hope you enjoyed the show, and thank you, Paul. We'll see you again.
thank you.